Hi traders, it's Chris. Hope you're having a wonderful day. This is a scalping method you can use using the Gold on Steroids Pine script code software. Let me show you what it looks like ordinarily. This is a 15-minute chart. You look for supply zones and demand zones and high liquidity, divergence, outside bars. You get the picture by now. So let me just remind you what we're looking for. So outside bars are really important. What I mean by outside bars, I mean that the price, while it's inside this channel, you see this channel here, special settings, then you're looking, while the price is doing this, then, and the moving average is green, you are looking for buys only. So that's the normal way of trading within the trend, of course. Now, when you see this going on, an outside bar on high liquidity, on a very strong supply area, and vice versa on a demand area, then of course you have a trading opportunity. So remember that. And those two things, three things, will also count in terms of a 1 minute chart. So let's crack on. So let's have a look at 1 minute chart. Remember that if you are not sure of the trend, then of course don't trade. And also remember, you want to be trading during high volume times. New York Open, London Open are the best times. So let's cover this in a little bit of detail. So the most important thing, and the only thing you need to know at this stage before you trade, is that you need to see the price have an outside bar. It's exactly the same pattern for the Gold on Steroids. The continuation pattern. So outside bar, outside the channel. If the price is within the channel, we're not interested in scalping. It's a trend trade. Okay, so these are really important. So let me just highlight a couple of these things. So I'm just highlighting where the price has gone beyond the channel. If it's moving within the channel, then that's fine. Let me put a smiley face on those just to remind me, and so you can actually see where it's at. And you can see how you can make a lot of money. Okay, so let's just drag it back a little bit so you can see. So when the price is within the channel, as you see here, then of course there is no scalping, there's no extreme price action. When you see this going on, then there's something wrong. Okay, now this is not a sell, this is not a sell. Why is it not a sell? Because that was the news today at 1:30. It had a big spike. It came down, but there was the buying opportunity there. See how the price came outside the channel? There, there, there. Once the price is settled, outside bar here, you don't know what's going to be happening after that. The other thing to notice here is the color of the 50 moving average. So when it's red, it is sell. When it's green, it is buy. So let's have a look at these opportunities here. So if you buy on the outside bar here, that's 100 pips there. If you buy on a pullback here, that's 93 pips there. Now, because we have a strict rule that an outside bar is a reversal point, then you don't want to be holding the position while the price is outside the channel. So in other words, if you buy here on this here, you're going to have a very tight stop. 20 pips is more than enough. You've got to aim for 40 pips minimum. But the way I would do it is I would hold the position until you have an outside bar. So here, at this point here, you have to say, well, that's gone too far. You are going to exit this position for 86 pips. You want to maximize the position because with scalping, you know, you're not going to get many entries. You might get 2, maybe 3. So here, for instance, let's take this one here. If you get in late here, this is a nice pullback, 20 pip stop. You don't want to be holding that position whilst the price is outside the channel, because there's going to be a reversal. You don't know when, at what point it's going to start reversing. It might take 10 minutes, but at the end of the day, you want to make sure your exit is there. So if you're manually trading and choosing your exits, you want to be exiting there, and that's 68 pips. So depending where you get in on the market determines where you get out. So in this instance here on this short position, first thing to note is the outside bar outside the channel, which is really important. Has to be outside the channel. It has to be an extreme price. Happens to be on supply zone as well, but you're going to get in as soon as possible on that one. You're going to have a 20 pip stop. That's all you need. And then a 40 pip target if you want to, or as I mentioned earlier, you're going to hold the position. It's literally 10 minutes, no more than that, until the price has an outside bar. An outside bar indicates there's going to be a reversal at some point. It's going to bounce. Doesn't mean to say you're going to be buying it there, because look at the color of the 50 moving average. So you're only looking for sells there. Now, so exits, the entry points are really important. The stops of 20 pips are really important. So if you're one lot, you're risking $200 and you're making $740. If you're risking $20 there, you're banking $683. Or down here, you're going to go a bit more to hold it a bit longer, maybe 15 minutes, and therefore you're going to bank $880. This is not small fry. This is good money if you want to earn, you know, $740, $800. There's another one here. Just about see it. You might not have got into that one because it's not on supply, but nonetheless it is an outside bar, and you can say that you're going to get into that position. If it's too ambiguous for you, don't do it. 20 pip stop there, and you can see that actually 40 pips was probably the maximum there, but you can actually see that there's actually an outside bar on demand as well, so you definitely don't want to be selling on demand. Bank your, that's actually probably 50 or 60 pips there. All right, so what happens is with the gold on steroids system, it actually draws these demand areas for you. It actually draws the supply areas for you, and it also gives you divergence. This red line here at equilibrium is an interesting one. No outside bar. Has to be an outside bar to confirm that the price has gone too far too quickly. So what we can say by that is just a reminder, is be sure of the direction. Be sure that you know which way it's going first. So at this point here, on this reversal point here, you don't know it's gonna reverse. We know it's highly likely, but you don't want to necessarily be selling it here, because you could find it comes back down and then it bounces. So once the price has established itself and gone into a downtrend, there's always a pullback. There's always a pullback. There's always a pullback, and you can get 2 or 3 trades. So during the London, the London session was very quiet. during the New York session you had one trade or two trades to the upside, $800. Then it came down and you had another two trades, $740, and then say $500 there if you're going one lot. Of course, if you're going smaller. Now, what I would say is that if you are practicing this, then use a demo account, but trade live so that you can get used to it and bank those profits. Once you get regular and get used to what you're looking for, then of course it becomes a lot easier. Don't spend hours on it. If you are trading, I would personally, if I was doing this, I would spend maybe an hour or maybe a bit longer, but no more than that. London session is very good from about 8 p.m. and for a couple of hours, and if that's what you choose. And then of course New York from about 2 p.m. GMT for a couple of hours, maybe a couple of hours if you've got high volume. Now during low volume times, the price never comes outside the channel. It always stays in and then just drifts along, which is not what you want to do. Hopefully that's helpful. If you've got any questions, if you've got the gold on steroids software settings and software, which is PineScript now, then of course you can get it. Just let me know.